Cool. Okay.
All right. And we are live. It is Fridays in Fintech here we have Kalyani. I'm gonna maybe butcher the last name, Ramadurgam.
Yeah, you got it.
That's
Nice.
really wow, awesome, great. Great to have you
Sorry.
here. Great to have you here. A little bit about our esteemed guest, Kalyani. Very technical background. I love it. Love to see it. Now helping banks, but a little bit about Kalyani and what she has accomplished. She was a software engineer, also started a career at Guardian Group, and then went to Apple, where she was a software engineer on the fraud team. Then went to Genesis Technologies, and now she is the co-founder of Cobalt Labs, where she helps fintechs, financial institutions accelerate and strengthen their third-party diligence, which means faster and safer paths to revenue, generating better partnerships and operational efficiency that doesn't increase headcount. Kalyani, it is great to have you here.
Yeah, likewise.
Yeah. So we always ask the hard-hitting questions on our podcast, so be ready for it. Do you prefer pineapple on your pizza? You're in New York too, so this is a very divisive question.
I'm gonna say yes, but only if there are olives on it too, which may
Whoa,
of your audience, but that's
that is weird. I'm not gonna be honest, that's a little weird.
I know you didn't see that coming. First, it was like, okay, I can get behind that, but you just don't knock until you try it. It's good.
All right, so just olives, nothing else on there? Pineapple and olives?
Yeah, nothing else, just those two.
Yeah. Wow. Okay. Well, good to know. Well, thanks for sharing that. I'll try maybe if I go to Domino's or something like that. But super impressive background. I love that you have a deep technical understanding of software engineering. But I'm curious, what led to going from that background to helping banks and fintechs understand vendor diligence and building products for that?
Yeah, I think our journey working on that came from a few different places. I think first, in my experience, I was at Apple Pay, as you said, like working on their fraud team, doing a bunch of different like transaction monitoring. And I think I just learned about how highly regulated this world is, and just how difficult a lot of these different responsibilities are to juggle, even at a company as big as Apple with all those resources. And so that was kind of my start in being exposed to more of the like fintech payment side. And then I would say the bigger kind of catalyst for all of this was during my time at Genesis. We were working on, we were working with health data belonging to citizens of foreign governments that also were super exposed to that level of bureaucracy and regulation that it's different from finance, but it's kind of an analogical kind of comparison there. And so I think as with my background in AI, thinking about what are some of the really big pain points and some of the big opportunities, like with generative AI and large language models, I could just tell that there was this like really painful, like deeply manual process that's just getting bigger and bigger in scope over time, and that's where we decided to start.
Yeah, very cool. It's definitely interesting and kind of what you're seeing in the space as well. 80% of banks are now adopting generative AI solutions, and there's just so many aspects too within parts of with yours, right? Vendor diligence. Like one person can't do all the diligence that generative AI does, right?
Yeah, totally.
Yeah.
And people have to go to sleep. They get tired. They make mistakes. They can't possibly read like every single word of every legislation that exists. So there's just some things that AI can help it.
Yeah, yeah, that's super fascinating. And one thing that we get asked a lot too, and I'm curious to hear your thoughts on is how are you showcasing that the way you implement this AI the AI tools that they have the safeguards in place, that they have the right oversight, and how are you working with your customers and them seeing that and building that trust within your company?
Yeah, totally. I would say that's like the first question we get under any circumstance. And I think there's a few ways that you can try to like strengthen AI. One side of it is you try to prevent it from making a mistake. And then the other side of it is, given that it can and will eventually make mistakes, how do you limit the like sphere of harm that happens there? So on the first side, which is how do we like strengthen it in the first place? I think there's a few different, tactics you can put even from a like infrastructure development standpoint to make things safer. So the first thing is, having like a RAG process where we essentially are feeding these models, the text of the regulation, giving it the right information at the right time to make decisions is where you force it to be confronted with like the truth it has to compare itself to, which in our case is like the regulatory texts themselves. And I would also say that in our platform, we have a really big emphasis on explainability. So every time we raise, if we say, okay, if you're working with, fintech or vendor A, here are all the issues we found in their compliance documents and their terms of service in the contract. We don't just say their issues, we actually can link to recent enforcement actions. We link to the specific clause in the regulation that's potentially a gap here. So I think forcing a system to come up with that evidence also kind of makes it reason a little bit more intelligently. And then more on the guardrail side, I think with anything we can do, the AI will always make mistakes. And so I think in our positioning, we're really careful to say we are a co-pilot. Like we're not saying take our results and give it straight to the OCC. We're saying we can enable your team to do work in a much stronger and faster way. But at the end of the day, a human still needs to be part of this process. And we're just another kind of stream of information.
That's super fascinating, right? It's like how do you one, as much as you can, educate the people using it, but also as regulators come down on these things like, hey, how can you, the person who didn't build the product but is using the product, explain it to them in a way that's like, here's our confidence levels, here's how much more work we can get done. And I'm curious to hear your thoughts too, because regulators are like, oh, AI, how do we properly oversee this? But I think a lot of the benefits are being pushed out versus like, how do we even see what's happening in the value there? I'm curious, as you talk with these partners and customers, what are some of the unique things you're learning with these implementations and that surprises them and yourself?
I think something that's surprising is, we talk to institutions at different levels of their risk appetite. Like some of the banks we talk to have quite literally banned AI in any of their
Oh
vendors.
man,
And so that's a really
no way.
first conversation, and some of them are actively looking for it. So for the ones that, in either case, actually, we found that we've been able to get through to some of the ones that have actually banned it and are the most afraid of it because
Mhm.
we're actually selling like risk software. So we're not a tool that is going to make your risk higher. We actually help you mitigate the risk of both the other AI tools you use and your other vendors. So we say, hey, if you're so risk averse, you can even use our platform to evaluate the risk of using us. So we really just help
Uh,
like strengthen all of that.
I love that. I love that. It's like, hey, you have to do these things. Why don't you use
Exactly.
it for us? And that's pretty fascinating. That's probably
Exactly.
a really interesting call. It's like, yeah, maybe I will. Maybe
Yeah,
I'll learn.
exactly. And we're like, got us. So that's one side of it. I think maybe the other surprising thing is that as like an early stage company, like you really have to find the right early movers. So our early customers are looking for AI tools. They're like excited to be like the most modern out of all of their counterparts. And those are just the best people to work with initially. So I think I've been surprised at how much that varies from institution to institution. It's really just people.
Right. Yeah, and especially in the banking
Yeah.
and in the fintech world too. What's really great, fintechs move a little bit faster, I'd say. Banks are great,
Yeah.
but they have RFPs and
Yeah.
all this sort of thing. So it's really interesting. First, you have to build this trust, build this ecosystem with, especially in the financial institution world. Um, but at the same time, like you're a startup, so you want to move fast and working with those institutions, but the balance of fintechs as well.
Yeah, totally. That trust, I think, is the only thing that really matters in the sales process at this level. So they just have to know that you like care, that you like are plugged into the right folks and are,
Um,
interested in doing something that's valuable.
yeah, yeah, for sure. So there's a recent regulation that came out. I know you just previously shared it with me. I'd love to kind of chat on that and
Hmm.
hear your thoughts of it was. Oh, I see. Even Cobalt Labs posted about it.
Hmm.
Third-party risk management. I used to just came out. This one was, oh wow, it means 2024.
Yeah, it was just last Friday.
Wow. I should have read over this. Curious to hear your insights on that and kind of
Yeah.
what you're seeing and what are the bank's response to this regulation coming out.
Yeah, totally. So the regulation you're mentioning is the recent guidance that came out exactly one week ago, last Friday. It was from like the OCC, the Fed, the FDIC. I think it was a bunch of governing bodies, and
Hmm.
there's nothing new in it, but it was basically just a really clear set of guidelines and recommendations for how community banks should be managing their third-party risk, which of course was right up my alley. So I read the whole thing, and I think some of the main takeaways that are relevant for people to know is that there's obviously a lot of services and consultancies like Jack Henry and folks like that are really outsourcing or really taking on some of that outsourced work of risk management. And I think the governing bodies are being really clear about the fact that you can get consultants and external folks to do as much as you want, but at the end of the day, if anyone makes a mistake, it's on you and not them. And no one can ever take that liability away from you. And so the big recommendation was to just double up. Like even if you're working with a consultancy, you still need to be using risk management tools, especially for vendors and third party diligence internally, which was good for me to read because that's exactly what we do. And I think something else that's probably useful to share there is that this was the first time in a while there's been really clear-cut guidelines. I think in the past, some of the some of the guidelines that have come out have been pretty controversial in terms of how they've been received. But I think everyone is really happy about this, from my understanding. The community banks, the regulators, I think they like hit on a nice middle ground of what everyone can like feasibly execute on.
Mm, interesting. And with your company, it's super fascinating, right? There's different levels of third party risk, right? There's, hey, we're using this vendor for this specific AML KYC, so we needed kind of do vendor diligence on them versus obviously, right, like I think it's been kind of hot over the past years about banking as a service, partner
Yeah.
fintech. So I'm curious what you're seeing really in that vendor management space from the implementation of this software for our first party risk versus third party risk.
Mhm.
And where do you guys fit in with that? Do you guys kind of handle everything or do you have a specialty?
Yeah, so I would say at its core, our tool is like a generalized like regulatory reasoning engine that can find gaps in any third-party documentation against any financial regulation. So that obviously has like a wide array of applications. What we found to be a really, really strong early use case is more on the banking as a service side, just because if you think about the like barrage of consent orders recently, like every BaaS provider, every partner bank on the acquiring or issuing side is like looking for a way to make sure that they know the risk levels of all of the hundreds of fintechs they're evaluating. So I think it's just a really poignant problem, which is why we've been getting a lot of good traction there initially. But I would say that we're not just doing that. I think it's been a really good wedge and entry point, but I think the even bigger play is in general that like vendor management, third party diligence. Because at the end of the day, you can kind of treat a fintech as just any other vendor or partner or third party that you have to completely evaluate. So it kind of generalizes, but we're starting with the partner space just because
Mm.
it's the hottest right now and it's where the regulatory pressure is.
Yeah, that makes a lot of sense. And I think it's kind of funny in other countries, I feel like the third party risk is even higher. I've heard like
Mhm.
some in Mexico where, and you probably know way about it, maybe way more than me, which is, hey, we have to monitor, we're this size company, we have to monitor our third party vendors in this specific
Mhm.
way, what they do, how they do it, and it's not even a financial services company.
Yeah,
It's
it's
just
everyone. I mean, there's another layer to it too that I only recently learned is growing a little bit. And so you've heard of third party risk, but get ready for fourth party risk. So now
oh yeah.
yeah, so you're like across river and you're thinking about, a fintech partner that you're establishing. You of course have to think about your risk with respect to them, but what about their vendors? Because if one of that fintech's vendors makes a mistake, it actually trickles back up to you for the most part. And there's a lot of ways that that can be really harmful. So I think you can just keep going down the rabbit hole. And at the end of the day, you still have some liability. So it's
So,
crazy.
so what is Cobalt building for fourth party? How do you even?
There's
It's uh,
levels, we'll get there.
yeah, that's interesting. I know it's kind of in what's going to really satisfy the institution or even the
Yeah.
regulators as well, right? Like
Yeah.
where does that line get drawn?
Yeah.
And I'm curious to hear your thoughts on that as well as things progress. Where are you seeing banks acting with these third party, these vendor management, and how they work
Mm.
with fintechs, and then also how they work with their vendors? What are
Yeah.
they going to have to showcase to their exec team, to the
Mhm.
regulators going forward with this, it's a harsh environment?
Yeah, totally. I think I can bring up a good example of something that happened somewhat recently, which is that, the regulators went to Morgan Stanley and they basically asked Morgan Stanley to provide a complete holistic overview. Like, tell us your top 100 riskiest vendors or partners you work with and rank all of them and compare all of them. And
No way.
that was not in any like specific place, right? Like Morgan Stanley just didn't have that information. So what they had to do was it was like millions and millions and millions of dollars of effort and outsourcing and lawyers, but they went through all of their different vendor agreements that were scattered everywhere, like contacted all of those vendors again and had to redo all of their risk analysis because it wasn't in one place. So I think the first thing that the regulators want to see is that banks and generally advise, including credit unions too, that these institutions just have a really good like bird's eye view of their entire risk posture. So that's the first thing. And I think execs you want to see that too because it just goes back into like reputation management and thinking about these like high level issues. So yeah, I'd say number one, it's like high level view, transparency, and being able to really easily see your risk posture. And then the second thing is more operational. So, what happens if there's a regulatory change and 60 of my vendors that were not risky before are now risky? There's no existing process that makes that easy unless you have it all in one platform and can say like, oh, ding, 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 reevaluate these 60. So I think the problems we're trying to solve are really those, like how do we make it as streamlined as possible and as efficient to show the regulators that you're doing what you have to do.
Yeah, that's super fascinating. And really, the way I think about AI LLMs, right, is you now have the ability to bring in all this unstructured data completely
Mm-hmm.
that wasn't possible before. And really, it's going to be people like yourself and Cobalt that say, hey, we have the right guardrails, we have the right frameworks to think about this. We even have our, I call it secondary reasoning of how you look at, you bring in this data to show
Mm-hmm.
to humans, like, hey, this is working this way. And that's really, that's the future I see.
Mm-hmm. Totally. And I feel like that's generally just why like the current, large language model craze is a lot of it is hype, but I think specifically in like compliance and regulation and that kind of world, I don't think it's hype, and I think it's just so useful. Even thinking about what like tennis finance does, like what large language models are best at right now is just reasoning with really large amounts of like unstructured text. And compliance is the the first layer of compliance is just parsing through all of that information.
Hmm.
And once you do that, then they can actually do the hard work of saying, what do we do with this? Like, what risk do we want to take on?
Right, right. And I'm curious, and then it'll address other gaps too, right? It's like,
Yeah,
okay, cool.
exactly.
We know our risk, and then it probably bleeds a little bit to this is how I think about our business as well. It's like how does it lead to operational efficiencies as
Yeah.
well as where we gotta invest our time, right? And
Mhm.
invest our resources, lead not just from a compliance perspective, but also from a business perspective, right? And I
Mhm.
think with from the vendor management, I'm curious if you're seeing any of that or having those conversations.
In terms of like opportunity cost of what they can do now.
Yeah, or just like, hey, we're able to see our risk, but what other insights do we want to see from our vendors? How is
Okay.
it if, yeah.
Yeah, yeah, I see. I think so, but yeah, right now, we can showcase risk and we can showcase a lot of that. But I think something that's kind of brewing that we've been seeing a lot is these banks actually want to be even more proactive with the information they get from their vendors. So, from our perspective, we'll be building out functionality where, the fintechs themselves can actually log in, already pre-upload all of their relevant documentation and everything they
Mhm.
need. So that then when it's time to engage the bank can just plug into it and then already have this first layer overview. So that's one thing, which is like engaging with the vendors before they might even be selling to a bank. And then I think the next thing flows a little bit more into like the news and media. This bleeds a little bit into KYB, but I think with vendors, you want to look at all their documentation and find a risk posture there, but you still need to screen for recent negative news, recent changes in management and things like that. And so I think
Mm.
something that is kind of adjacent is searching for all of that like adjacent information about third parties you're working with and seeing how it all like fits together.
Yeah, yeah, that's interesting. It makes sense, right? It's like,
No,
how much reputation risk will
exactly.
this affect our business? Is this even worth taking on? And
Yeah.
FIs are super risk averse right now, or so it seems.
Yeah.
Super fascinating. It's I'm curious, have you found anything that surprised you with this third party risk management that you just learned from working with these FIs and also these third party vendors as well?
Yeah. I'm honestly just surprised at the way things are being done right now, to be completely honest. Like, I at least thought there were some somewhat basic tools that can help streamline this a little bit. But I think, like, looking at the market, looking at all of our customer conversations, it seems like every institution I talk to is either doing this with spreadsheets or with the tool that is basically just a glorified spreadsheet. And by that, I mean that's still it's still useful for sure because you still need to like digitize manual processes, but like digitization is just like the tip of the iceberg. I think it was just still crazy that there were people doing the most like horrifically manual work, and their like trained and expertise is something so different that there's just no point in them spending like hours and hours and hours doing this. Yeah. I would say I've just been surprised at how bad things are right now.
It's like, come on. Oh, you work at some of like the best tech companies, so it goes from
Exactly.
yeah.
Exactly. Like I went from like, a 60-person startup to this. So it's very, very
It's refreshing, right?
yeah. Yeah.
Um, that's thanks for sharing that. I'm curious, where are you also seeing other interesting spaces in financial services and the application of AI? Anything that is kind of piquing your interest?
Yeah. I think maybe I'll speak outside of the realm of like compliance and risk, because I think we've been talking about that. But I think there's a lot that can be done with respect to there's always been like automated decision making and things like underwriting and credit risk analysis. But I think the ability to take in even more types of information when you're making these like large decisions about like credit or about kind of financial readiness.
Mm,
So what I mean by that is I think there's an opportunity to, be able to like give credit to folks that may have not initially been eligible because now we can reason with a lot more kinds of information than we could before. So I've always thought that was super exciting. Um, Even thinking about some of the work I did at Apple on fraud, like we were doing a lot of transaction monitoring to check for entities that might be on like anti-terrorism lists and things like that, or terrorism lists. So I think stuff like that, was still somewhat rudimentary from a like natural language perspective. And so I think that's just such an obvious use case that I'm assuming Apple's now doing that and not doing it the way they were when I was there.
yeah, that's
Yeah.
that's funny. When I was at SoFi, I was just like, all right, check this list, and it's like,
Yeah.
is this really it?
Yeah. Like we're doing like, oh, it's within one or two characters. And I was like, I think
Yeah. It's like, wait, we're not checking any other thing or any other weird databases or
yeah. Or like scanning. Now you can scan the entire internet in a second. Or,
yeah.
you can at least be plugged into the live internet. So you can just do so much more.
Yeah, it's super fascinating. I was selling this one startup yesterday and really like talking about LLMs and AI, the ability to bring in just more types of data and different types of data and different types of platforms. They were
Yeah.
talking about alternative credit sources. I'm sure you're familiar with Nova Credit as well. It's like,
Mhm.
yeah, we look at Venmo transactions, we look at all these
Mhm.
other peer-to-peer payments and stuff like that to
Yeah.
build a better risk picture. And I think that's going to happen. And also, I think the whole underwriting process, it still takes way too long. And
Mhm.
there's all these new types of ways that people are making money and cryptos
Yeah.
in there. So it'll be
Oh,
super
yeah.
fascinating.
Yeah. For sure. I think I'm excited to see. over the next couple of years. I think a lot of cool stuff is gonna happen.
Yeah, you're gonna help make that happen. So it's pretty exciting.
We'll collab.
We'll collab. Well, Kalyani, it was great having you on here. What we usually like to do is we love closed loop systems, which means gift cards. No KYC, no KYC required, and really appreciate you having on here. So the random Midwest restaurant that we got for you is, we're gonna do throwback because I'm feeling this right now. Olive Garden.
Oh my god. I Olive Garden and will not tolerate any slander.
Oh man, me too. Me too.
Their Italian dressing, honestly, it's one of the best dressings I've ever had. I'll say it.
No way. That's man. First the pineapple and olives, and now the Olive Garden.
I want you guys for my opinions.
And just for the folks listening, Kalyani's in New York, which is, I think, one of the best food capitals of the world. So those are strong words.
I'll stand by it.
Awesome. Well, Kalyani, really appreciate you having on here. Look forward to continuing our conversations, and have a wonderful weekend.
Thank you for having me, and I'll see